This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. I have got to kind of warn that the non-farm payroll is probably the darkest cloud, that and any potential Iran escalation this week. So keep that in mind. If you've got hedges you want to put in, it's cheap at the beginning of the week, not so much as we get closer to non-farm payrolls on Friday. All right, so gold is coming back down a little bit from the dollar pop. As you can see, Qs are very much flat from this Friday high. You get just hours and hours of sideways. So much so with this kind of head and shoulders with the SPY as well. Wouldn't be surprised if we get a little weakness if it stays below 721. Right now we're just at 720 SPY, and I'm just talking about chase timeframes. For example, the QQQs at 674 comes back down to 670. So we're talking 4 points. Maybe you get an overshoot into this 6666 for the Qs. But the point is, right now, the market has this kind of grind mentality of the dealers are still supporting the environment quite well. Thank you very much. Anyway, look at yields. Yields. Look at that. They came down to my double line, and they're pushing back up. The 10 years at 4.41. So the market is flat. Dealer has a cushion. I don't think we're going to get too excited. Like I said, if we do get some pullback, it's going to be short and probably supported. We would really have to break back inside that 71.91 for SPX to go anywhere south. All right, so NVIDIA had a nice pullback. Literally, take a look. This is NVIDIA because they don't report until the 20th, but you can see how it got a little above its skis and came back in with some semi-softness. We'll look at software, how it's doing. And then basically it's just sitting here on 198. You can see also this form, this retracement, likely heads here for a few days. The lower part is a target for more of the 190 location. I don't know if you can see this, but you've got some gap fill here about 190. Actually, let me put that in. So if you're still doing a short in NVIDIA from last week, remember we have AMD on Wednesday, but long story short, it is a fabulous rejection, and it just needs to break that 198 to go back and fill this 190 area. Luke, are you still short FedEx? Please tell me you are. Please tell me you are. Please tell me you are. Look at that gap down inside the trend line, 371. That's the 10-week. It needs to stay below 371 for FedEx. So this was a nice dump. That was a bearish Harami dump. Got supported, had earnings, wasn't so bad. Data center, flatbed trucking, all kinds of good data on that. Anyway, but the point is, diesel costs higher, didn't seem to matter. Boom, that just did a gap down below the trend line. Bearish Harami on Friday with a gap down to the 55. That's going to be nice if that continues lower, by the way. So FedEx, that's going to be a very nice continuation break, but it has to stay below. Look where it literally opened on the weekly. So it opened at 379.50, hit a high of 379.58. Can we just call that 380? And 370 is where it needs to stay below. So 380 has to stay. That's your, don't let it get above. There's a gap up there. You want something even better is 370, although they were hitting it. And then UPS just got hit too. So that's what's going on. Also, we had UPS do earnings. So this is another reason why they're softening. Revenue beat, earnings beat, but the guide was light. So that's an issue, but that's the hit. It wasn't just earnings because they did fine, except guidance wasn't so exciting. It is definitely Amazon. So Amazon is targeting FedEx and UPS specifically. Amazon is green after announcing the new business in competition with FedEx. Bid-ask spread on FedEx is insane, but it's so pretty. Friday, when we get non-farm payrolls, would not be surprised. Here, let me explain why. We had that ISM manufacturing print. Let me find that. Yeah, remember that? Payroll. We have non-farm payrolls this Friday morning. And the bet is that, or Wall Street expects, that we will only add 49,000 payrolls in April because manufacturing ISM missed and employment slid to the worst print of 2026. So because of ISM manufacturing, they're expecting a weak payrolls print. Last month, it was like 180,000. This month, it's under 50,000 is what they're worried about now because of this. So will the market see bad news as good news and they price in a rate cut? That's what's going to make it tricky for this week. All right, so FedEx continues to tank. The chase du jour, as long as it stays below that gap down of 380, breaks 370, it's doing well on Amazon News. UPS had a double whammy of earnings beating, but guidance light, and the Amazon News. It's heading into that 200-day. So basically anything underneath 100. And if you're looking for a little cheeky potential area short, I would say the 200-day, you can see the consolidation here. Everyone's going to see that. So an overshoot would be 95. So UPS overshoot 95. It's already down 9%. FedEx 360. It's already down 7.4%.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.